Let's get in Gurmeet Chadha, Managing Partner and CIO of Complete Circle, on the show to talk about his thoughts on all of this and more. Gurmeet, great having you. Thanks for taking the time out. I hope all is well. And I hope your funds are doing well too. I'm sure they are. Gurmeet, before we talk about the markets at large, since we're on the topic of insurance, can I ask you, if you look at this space, do you like them? A lot of promise of growth. Somehow, the, the market returns haven't been really great for the last 3, 4, 5 years, whatever time period you take.
Hi Neeraj, always good to connect. We started getting underweight insurance post the taxation change which happened in the budget, previous budget, not the last one, wherein a lot of it gets sold as investment. This is the reality. I've been a banker for more than a decade, and insurance products in India are sold as investments, whether it is LIC or whether it is the private insurers, irrespective of whatever people would like to say. A lot of it was, a bit of it was tax arbitrage. And after that, above 5 lakh tax thing going, I think somewhere the banca insurance part and even the retail channel part got impacted. See, this is a sector which will give you a 15% kind of a growth as far as new business premium is concerned. Whatever the Excel sheet may say, penetration may say, I think and I think players who uh, focus on individual protection more, term plans more, non-par products more are likely to to do better. So within the pack, HDFC, we like, somehow we only have right now non-life insurance names like Lombard. We are also looking at Niva, and we are looking at some of the other plays because that is where the growth can be 25-30%. Also, Neeraj, once this limit of Ayushman Bharat gets 10 lakh for senior citizens, you are talking of 33 crore senior citizens in India coming under a 10 lakh cover. And what it does to overall general insurance piece and healthcare and hospital and diagnostic is a far bigger story than playing this penetration, which we have been talking for last 5, 7 years. So I'm better off in capital market plays more, where I see 25-30% growth, whether those are exchanges, depositories, mutual funds. Some of the brokerage firms are now available at 10-15 times versus getting into life insurance. It's always a relative game.
Okay. Um, a lot. Gurmeet, the interesting thing is, I mean, today I was watching a link on our channel. A link is effectively a researcher coming in and talking about one particular stock, right? And the stock that was being spoken about was DDEF Plastics. And then it got me thinking that India has moved on from a market which had 10 or 15 main sectors to having a sector, then a subsector, then a supplier to that subsector, and then a supplier to that supplier as well, right? And just that the number of companies available are so high. So I'm trying to understand the classic pick and shovel story, but the point being there are a lot more ancillary industries now to choose from. I'm trying to understand, when you think of, let's say, the building material stuff, right? Would you kind of look at the main building companies or real estate companies, or look at wire companies or cable companies like Polycab, etc., and stuff like that, or suppliers like DDEF Plastics or others who might be supplying to Polycab and some of the others, or copper players who eventually form the raw material? This is such a long chain. How do you think about this, and is there a particular sector in which you like the supplier more than the actual company?
A lot of them, Neeraj, and I think this is where markets get evolved. Even if you look institutional ownership beyond top 500 stocks is now increasing thick and fast with growing AUMs with mutual funds, especially in small and mid cap categories. So one space we like, which is with this entire circular economy space, not really linked to building material, which is a recycling space. So plastic, since we spoke, we like this plastic recycling space. We were very early in Ganesha, almost entered in 3 digits. Look at this way: we consume like 5,000 crore plastic bottles. 40% of that is contributed by the beverage companies like Pepsi, Coke, etc. And we recycle hardly anything, right? And plastics takes about 200 years to decompose. In fact, there is a study which says the oceans will have more plastic than fish by 2040. So we really need to do that. And government has now come up with a regulation of using recycle, 20-30% recycled content. And I think there is a fine to it. and industry capacity is just about 60% in terms of meeting that demand, and Ganesha is about 30-40% of that. So we like that. Then we are also looking at digital dump which we are doing, which is the electronic waste. The way we are, reusing or getting our mobiles changed, our consumer appliances changed. I think that's another area we like. We also like water as a theme. Water is one of the biggest themes in my view next 5 years. So we like Vatek, we like Iron, Exchange, and some of the other names. And then the last one is zinc recycling. And we like JB Chemicals. Again, got lucky there. That's more a zinc dioxide play, but zinc also has end use in tires largely, and then specialty chemicals from. So I think this circular economy space, where we say that, I think this is a huge, huge opportunity. Global waste management is $600 billion. India is not even 4-5% right now. We're just starting. And some of these problems, clean air, clean water, less plastics, these are genuine health problems which need to be solved.
I'll take a big shift from that, Gurmeet, and talk a little bit about lending, because you've got some of these CV financiers under pressure given HDB's commentary. What's your take, one, with regard to HDB's numbers itself? A lender where the cycle, at least the management indicated, seems to be turning. But at the same time, new listing, HDFC Bank's subsidiary, and has tailwind both cyclically, but does it have enough bandwidth in terms of valuation? And what do you make of the commentary given the kind of spillover effect it's had on a Shriram and a Chola today?
I'm extremely bullish. I think we are at the cusp of new phase of corporate lending. 300 out of 500 Nifty companies are debt free. So they have been averse to capex. I think the capex cycle is just starting. I'm some of the early proponents of it. Fingers crossed, very early, but that will happen. And if you see SBI is doing a QIP, a lot of fundraising is happening by NBFCs. And 3-6 months down the line, you will start seeing mortgage at sub 7, car loans at sub 7. And since we haven't seen it for 4 or 5 years, people have forgotten what happens when credit picks up and the secondary impact it has on consumption. My sense is, look at, for example, HDFC Bank. You're getting it at what, 110, 112 BPS, price is around 2000. There is a bonus announcement, and yet there is hardly any reaction on the stock. So somewhere down the line, the market is obsessed with picking multi-baggers, going down the value chain. Sometimes you are missing the simple, boring stories. I think financials are due for a big, big breakout. I also sense some big reforms coming, both from a FI ownership, also from voting rights being capped at 26%. I think there's an overall needed, and it's a long due. Last time we did serious banking reforms was 2003. So you will see some big reforms coming. Finance ministers talk about NBFCs, how big they can become, how the important role NBFCs will play in next 10 years. So I think there's something big happening in banking from a reform perspective. And once the interest rate cycle starts easing, I think the secondary impact it has on consumption and lending, I don't think so the market is factoring in right now.
Could be just a follow on to that. So, one, there's already been a bit of a re-rating that HDFC Bank has seen, right? But and now size has started to matter. So they've done dividend. That makes sense because they likely don't need that capital at this point because there's no growth capital requirement per se, and there's enough profitability to support growth. But how should one therefore look at valuations? Because pre the merger, you were at 13 lakh crore, large runway. Post the merger, you're double the size now, 25, 26 lakh crore, merger plus a couple of years. How do you look at valuations? Now you're at 2.5 times book. That's one of the most expensive banks when you're looking at it from a global perspective. But at the same time, runway for growth, is it strong enough? Can it do 18% on this size?
I think 15%, yes. 18 would be challenging. I agree with you. I think same thing was said for Bajaj Finance also, a few months back when it was hovering at 6,000 pre-bonus and split. And good companies make a comeback. So once the cost of funds comes down, net interest margins start improving, there are treasury gains because G-Sec yield is falling, and then you have a good uptick in the economy in the second half. This credit growth of additional 3-4% can give a big delta because bank balance sheets are leveraged. And I don't see even global banks doing 20% ROEs. Which global bank does a 20% ROE, or 2% ROTA for that matter. So I think India doesn't I mean, it's unfair to compare. And look at the largest bank in US is $3-4 trillion. Our largest bank is what, 200-300 billion dollars. I think we will have $1 trillion bank very soon. So I'm not saying this is a multi-bagger thing, right? But this has been underperforming Nifty despite the recent run up for last 3-4 years. It's never done that in last 20 years. And once the interest rate environment changes, regulatory reforms happen, more participation comes. I think it will continue. So I think financials will probably be 20% CAGR for next 2-3 years.
Very interesting. Gurmeet, you've been an early investor in a clutch of defense names. I know that, right? There are now companies coming out with defense, aerospace funds. So defense is a known theme. Aerospace, both commercial and defense aerospace related component suppliers. How big could this be? And are there companies in this space that, I'm not asking you for a buy sell recommendation, but are there companies in this space which are doing interesting business or you know of? Because I don't think too many in the market know of aerospace sector related firms.
So a lot of defense companies will also get into it, Neeraj, especially the private players, right? And I think one space which is not really aerospace but coming up is simulators. So globally, the ratio of physical training to simulation training is 70-30. India, on the other hand, is 90-10, with physical training being 90. Now, in a digital economy with modern warfare, you cannot have physical training. And this I'm not talking just from a defense perspective. I'm talking from aerospace in terms of even the aviation sector and a lot of spaces where you need simulation. So I think there are a lot of opportunities coming in that space. Also surveillance. I think the kind of borders we just did a strike on Myanmar, which got unnoticed. We have what, 1,200-1,400 kilometer border there. Then you have different, unfortunately, very hostile neighbors across. So that's another opportunity which again has not been. And by surveillance, I just don't mean wiring. Surveillance is if you put modern surveillance at work with the kind of spread India has, that's like 3-4 crores per kilometer. So that's the second opportunity. And then, there's this entire sector. It is same as where electronics was near 3-4 years back. People used to question whether Dixon is still okay. So 4 years back, the top line of Dixon has today become quarterly profit, right? So just the growth runway, if EU does what, 5% of GDP as defense, you're talking about additional $500 billion of defense spending, and not even coming to the Saudis, the Middle East, the African and the Latin nations. So I think the entire thing will get re-rated with Trump being there, unfortunately, for 3 years more.
Point taken. Gurmeet, if so, you've spoken a little bit recycling, you've spoken a little bit about financials. Outside of these two, and defense maybe, any big theme that you're looking at from the next 3 to 5 year perspective, which you're buying today and you believe will be steady compounders for the next 3 to 5 years, where valuation is on your side, growth at the right price?
I think power equipment is one space where, I think the valuations are still reasonable, and including the PSU names, including some of the private ones like Kalpataru. Look at a Tata Power also 30 times, not cheap, but not like really expensive. And then you have a lot of names there, and I think there's a huge opportunity in transformers, in rectifiers, insulators, huge opportunity. Our mix is now uh, fossil, non-fossil, almost reaching 50%. So the issue is always transmission. Second space, I think the other space, which I think is the rural-based thing, the agrochemicals, the normal chemical names, very under-owned because, look at the numbers Relis came up. And I think once rural economy picks up, the cycle tends to be, much longer. And I'm putting a lot of money on rural recovery coming in that place. So I think a lot of agrochemical names, especially who are thinking ahead in terms of, crop protection, seeds, fertilizers, etc. So PI is a very old favorite. We like Coromandel here. I think the group itself has demonstrated in being ahead of the curve there. So that's another one space which I think is very underowned and probably needs. And look at the money government is spending on the different schemes they have, whether it's Ladli Behna, Lakpati Didi, the kind of stuff which is happening on nano urea. There's a clear focus on the hinterland, lifting people above the poverty line and focusing there. And I think whenever monsoon has been 5% above normal, the agriculture GVA goes up to 6.5. Haven't seen that for a very long time now. So there's big re-rating and big potential there for next 2-3 years.
Excellent. Thank you so much, Gurmeet, for a great conversation. Always refreshing to hear new thoughts coming through from you, and that's always the case. So thanks for that.